Welcome, breakout traders, to Breakout Trading Answered, the show where we talk about all things breakout trading. And this is part 3 in our series on how to improve breakout trading strategies. And we're going to be talking about the best days to trade, part 2. And of course, we've got a special guest, Mr. Breakouts himself, Thomas Nesnador. Welcome, Thomas.
Thank you, Guy. Thank you very much. Thank you, Andrew, for having me. Yes, we're going to talk about what are the best and worst days to trade indexes, especially Emini S&P 500 and Emini NASDAQ. Please, guys, very important, if you have not watched the previous episodes yet, please do that. We're sharing absolutely priceless tips which can improve your results and help you to make more money literally within minutes. And we're going to wrap this up. We're going to wrap up this series of looking on best and worst days for trading these indexes. So I'm very excited to be back with this one. This, by the way, is a result of a few months of work what I'm sharing with you. As you already know from previous episode, I took a completely different approach to assessing and analyzing day of weeks and day of months, which was because of my recent trips around Southeast Asia, because it was so inspiring that I got there this idea, and then I worked on this idea there. And let's have a look on what is in front of us today, because it's very exciting as well. So in this episode, we will explore DOM, day of month concept on Emini S&P and NASDAQ, again, popularized by Larry Williams. But as I said, we're talking completely different approach here. We're taking a different approach, which will give us way better insight, which will give us a much deeper understanding of what's going really on with days of months. We will not look on each day of month separately as a relation open to close. So we will not take daily bars, and we will not be looking what each day would look like if we would buy or sell at open and they exit on close at the end of the day. Instead of that, we're looking inside of each day of the month, hour by hour. We're assessing 60 minutes bars connected together, so we can see the intraday movement. We see what is going on intraday, which gives us much clearer picture of the tendency and of the reliability of that tendency. And as always, I will be talking about regular trading hour sessions only. So let me show you how we will do this, because this one was the trickiest one. You know that last episode I shared day of week. That was a good one. Before that, I shared another strong tip. This was really tricky. The problem of testing day of month is that we don't have enough of a sample size. It's different when you test day of week, but day of month, we're very limited with the sample size. So again, sorry, I have another typo at the bottom. I tested 2007 to 2023, not 2013, but 2023. That's the furthest I got a quality history from TradeStation. The data before 2007, you can forget them. It's not a good quality. 1 hour bar, regular trading hours. And now I need to explain to you what I really did, how I evaluated, because this was the tricky part to figure out. So let's start from the very bottom. So at the bottom, I said 2007 to 2023. Now, you can see we have base and day of month columns there. So it means the way I tested is if you take all the hourly bars from 2007 until today, and you have a look and if you pretend you would be buying and then exiting every single hourly bar, your average trade on an hourly bar would be plus $2.30. Okay, with the base, you would make 181,000, and your average hourly bar would be 230. Now, if you have a strong tendency, and this applies, we covered this in day of week, and it applies for the day of month as well. This number, the average bar in a good quality tendency, you have good quality intraday bars. Like the quality of intraday bars needs to improve significantly, at least by 100%. So if you have a good day of month, you will see a significant improvement of the quality of intraday hourly bar. Now, as I said, the problem is that we have a small sample size on one index. If we do this only on one index, the sample size is basically for one. So we can only pick 1 day of month. That's 12 per year. That's 15. That's about 200 trades per 15 years, which is not much. We've talked a lot about this show in this show about sample size, having hundreds of sample size to get a good quality assessment. So what I did, and this was the hardest part to figure out, you see at the very top of this slide, I did this assessment of the change of the quality of bar for each day of the month, index by index, including, just for curiosity, Emini micro S&P, not just Emini S&P, but micro S&P. And then I calculated the average. Okay, so if you have a really good and strong day of month, then basically every box on the given line of day of month should be green, because then you know you have a strong one, because every index has been improved, and you will have some powerful average number at the end. So this now you have 5 times or 6 times more of a sample size, because now you're combining them together. So let's have a look what we found. So this is the entire assessment, bar 1 to bar 31. And it's very visual. I'm a very visual person, and I love this visual assessment when one glance tells the whole story. And for me, the story, this is funny, right in the middle of the month, day of 15, and I have no bloody idea why the middle of the month, we can see a super strong, huge improvement among all indexes, combining to the highest ever number seen in this table by a big margin, exceeding all the other numbers in the table, right in the middle of the month. What on earth is going on here? I have no idea. It's like, why on the 15th? So I don't know. I do not know, but the tendency is really, really, strong. The other tendency, which seems to be quite strong, is day 24. We still have over 1,000% improvement on average. And although YM box is not green, it's still highly positive, 687%. These green boxes has been, I just used the calculation Excel, color up top 10%. So this is just top 10% of result, but probably 6,870 would be among top 15. So day 24 is very powerful as well. And then we must not overlook day 31, this is very interesting one, because on 31, we can see it's a massively short day. Again, even these 2 white boxes still show quite strong negative numbers. So it's a massive short day where really we have a big change on a short side. And that's quite interesting, because I think this suggests somebody big, or a group of big traders, banks, maybe for some legal reasons or regulatory reasons, they obviously are closing their position at the end of the month, or maybe some specific group of traders. I don't know what's going on, but it really looks like that the end of month, the last day, there is a huge volume of orders, short orders, which results in big sharp move. So I isolated these 3 days of week, and then I had a closer look. So I want you to see what they look like individually. So let's start with the day 15, which still puzzles me. This is, again, we're looking on hourly bars connected together. Hourly bars connected together since 2007 till now. This is mind-blowing. Like, this is a very high quality curve going up. There is something strong going on the 15th day of the month, which significantly impacts long trading. I don't know what it is, but unequivocally it is there. It might be fading out recently, but it can be just temporary. We saw that on day of weeks already as well. But there is something going on the day 15. Again, I have no idea what it is, but I can tell you one thing. This picture is strong enough for me to consider at least double my position on the 15th day of the month. So that's the day 15. Let's have a look on day 24, another long day. So 24, this is again very interesting. We talked the last episode in day of week, we talk about these changing tendencies. We see similar tendency here, but last 5-6 years, we do see a very, very strong upward tendency on the 24th day of trading of month. So, and before it was mostly flat, except for before it was down. But it suggests either the down part, which probably started to happen some 10 years ago or 8 years ago, both parts, the downward and upward, suggest something must have changed for the 24th day 10 years ago. I have a suspicion here. The suspicion is option expiration, because options expire the third week of the month. So we talk 7, 14, 21, about 21. I think it's Thursday on Friday. It's either expiration Thursday or Friday. So this is the Monday, should be like the day after all these expirations are done. So I think this is somehow related to option expiration of indexes, which is an impactful event, because we have a lot of option exercises and there's a lot of going on. But this is just after that. So something powerful is happening right after option exercise. And again, for a long side, last few years, very powerful tendency. And again, I'm sold. Like on this one, again, 24 after option expiration, I would have a look. I would double my position. And I'm even inclining to have a look on the option expiration day itself, which will be another project. So that's a good one as well. Now, the last one, we had day 31, which is the last week, last day of the month, and we saw a sharp drop suggesting downtrend. This one, I do not see it on the intraday. I do not see it if I have a look on intraday movements. It's very confusing. Although we do have some suggestion of down move on Emini NASDAQ the last day. So I'm still confused about this one. So there is a fundamental reason why there could be a different behavior. There are strong numbers suggesting that there should be some downward, bias. But if we look bar by bar, it's not the case. So I don't know why, but it's just like, for me, I'm an analyst and trader. If I see a picture that I'm convinced in, I do go with that. This is not a picture I'm convinced in. So I would scrub this tendency. But overall, if we summarize, let me have a look if I have a summary here. Yeah. So we summarize this. We can go to the last slide, please.
I was just going to say, Thomas, for the 31, something to consider actually is that not all months have 31 days, so the sample size is a little smaller as well.
That's a good point. Yes.
Yeah. Okay. True. Summaries coming. Yeah. Here we go. Yeah.
Yeah. So overall, we definitely do have strong and very convincing days of months. I prefer day of week over day of month because of the sample size. But as I share with you, I took an approach where I managed to overcome the sample size issue, and I still have strong conviction in the day 15 and 24. But it's an icing on an iceberg. Like, I could completely live without the day of month concept, at least for now. It's really icing on the cake. Did I say icing on the iceberg? I did
probably. We know what you mean. Icing on the cake. Yeah.
Yeah. But so it's icing on the cake. I would consider, but my good one is day of week. So that's basically it, and that's the end of my recent work on deep look into day of week and day of month analysis and tendencies.
Excellent. Well, thank you very much for sharing that with us, Thomas. That was brilliant to see the research you've done, and as I mentioned in the last episode, which I recommend everyone go and have a look, where we talked about day of week. I think that the way that you've looked at hourly bars is unique. I haven't seen anyone else do that kind of research, and it really gives you a good insight into what's happening during the day, and you can have a look at the quality of the movements there. So, thank you very much. I know that particular research would have taken you a long time. So thank you for sharing it for free on the show with everyone who's watching.
And don't forget, guys, we have plenty of advices like this. This show will save you a lot of money, a lot of time, and it's completely for free. So subscribe, give us thumb up. That's very important. If you give us thumb up, we will be more encouraged to keep sharing our know-how. And let's actually, I have one more slide, if I may, guys. If you struggle to build really great strategies that actually do work, then don't hesitate and go get this book called The Breakout Trading Revolution. Do it right after the show, because here you will find a proven framework that does work, that does create proven, it's a proven trading formula that does help you to create working strategies to build your ultimate trading freedom. So please get this book as well. And we will be looking forward to seeing you on the next episode.
Absolutely. So, see you at the next one. Happy trading.
Happy trading.